Hey there, welcome to the Reinsurance Podcast, the place where we dive into all things reinsurance, the coolest part of insurance. We're your hosts, Jared and Ben, a couple of ex-practitioners who loved the industry so much we founded Supercede to tackle some of its biggest headaches. And we're here to share our insights and stories with expert guests as we uncover what's really going on in the industry.
Welcome back to the Reinsurance Podcast special Monte Carlo Rendezvous
Thanks
edition.
for having me.
Yeah, Ryan Dodd, you are here as our guest today, representing Intangic, a company which you're the CEO and founder of.
Indeed I am, yeah.
I have to ask, how did you go about doing that? Because that's no small undertaking.
Well, if this was an hour-long podcast, I could tell you the short version.
Okay.
But for the super short version, I've been in financial markets for the last 20 years. And insurance is a financial market, and I really felt like at some point about 5 years ago, when you look at the landscape of the value created in the world was really technology, right?
Yeah.
I mean, 20 years ago, the biggest companies were General Electric, Citigroup, British Petroleum, and now the biggest companies in the world are Amazon, Netflix, Google. So I really felt like, from a risk management perspective, technology is driving a lot of value, but how do we really think about the risk?
Yeah.
And I really felt like that being able to answer that question should be enough to create a business and then ultimately solve for large organizations that question. I think that's really where it came about. It just started with the idea that there's got to be a way to get our heads around how to manage this risk from the technology side, because it's huge.
Yeah, absolutely. And you're not coming at this opportunistically either. You are a peer-reviewed expert in finance and cyber risk, and how they interrelate to each other, right?
Well, thank you. Part of what we try to do is we try to, anytime you do something new, you're going to have people on different sides of the spectrum, right? There's going to be people that are enthusiastic and maybe curious, and on the other side, you may have people that are just outright skeptical. And by doing things like peer-reviewed research, by publishing our findings, we're trying to show and sort of educate the market and say, hey, look, there is a way that this can be done, and we're putting it out there for acceptance in a way that, again, coming from financial markets and trading hedge funds and whatnot, I mean, research that becomes accepted then becomes the way the market works. And so that's taking a similar approach.
Yeah, makes complete sense.
Yeah.
And so just to help people understand, is you created this company, Intangic.
Yeah.
What makes it different to other companies in the cyber risk technology world?
So we came at it a little bit different, and I think it starts from the view of when you're an outsider to insurance, you don't have the baggage of sort of legacy thinking. And again, I'm not saying that was by design, it just happened that way, because I came at this and approached it very differently, which was, cyber, unlike, say, weather or property risk, it's a human risk. It's behavioral. And so, from my perspective, the market is looking at, the insurance market for cyber, looks at companies typically with sort of a one-size-fits-all approach. It's, hey, let's meet together for renewal once a year, set your posture, sort of what's your cyber posture, we're going to price that. Well, the reality is you've got, attackers who are adjusting and adopting different techniques based on, all those rules that the insurance market put into place that basically said, if you adopt these best controls, these best practices, you're not going to have a breach going forward. Well, the hacker has already moved around. So I felt like, again, having a 20-year experience in capital markets, my job was to determine behavior of market participants on a regular basis and create risk management programs. So I felt like cyber is a natural fit, and if you look at it dynamically rather than statically, then you can start to do risk assessment that's actually accurate.
And this dynamic piece is quite important, as I understand it. Right? One of your products is all about sort of dynamic cybercrime never sleeps type thinking. Right?
Yeah, absolutely. And I think, so again, it came from this idea that traditionally in the insurance market, you've got the insured and you've got, so we deal only with large enterprise, right? So very large organizations. They've got millions and millions of dollars in cyber budget. They've got all sorts of information about them. And they're taking this information and they're sharing it with their underwriter and their broker. It's all very important information. What they don't have is context on what are the behavioral attackers, right? What's the behavior of the attackers across everybody in the landscape? So again, think of it like a market, like a stock market.
Yeah.
You have participants all over the place that are taking different actions, doing different things. So I see it very similarly in the sense that when you can see the sort of the market action across all the participants that are, in this case, unfortunately, they're malicious attackers. Just like with a regular market, observing and examining their behavior reveals something about where risks are in the market. You know what I mean?
Yeah. How do you do that? How do you observe such a broad field? I guess that's
well. So very similarly to, you think again, take something like a bond market.
Yeah.
Where you got human actors.
Yeah.
Effectively, the bond market says we're going to look at 5,000 companies at any given time. Just like with cyber, there are organizations that give them a rating, right? You're good, you're bad, you know, AAA, triple C, whatever. So you have these agencies, just like in cyber, that are providing cyber ratings. We all know what I'm talking about. And ultimately, at the end of the day, those ratings are fine, but what's happening is you've got humans making decisions in the course of everyday business, and the market saying, well, this company looks riskier than this company, and therefore what happens? The price of that bond goes down, the yield goes up, meaning it's becoming more and more risky, but it only matters because you're comparing them to everyone else. You see what I mean? And so take the same approach with cyber, the same principle. You say, look, if we can look at 5,000 companies, and we can examine how the participants, in this case the hackers, are taking action against those companies, and by observing that, you start to see how companies look more risky versus the others. And again, it's priced just like a market would, and from an underwriting perspective, you can say, okay, this company is clearly more risky than this company. And it turns out when you run the data, it's true.
Yeah, right? Amazing.
And it's important that you can stress test that data with, there's so many cyber events now. There's 10, 15 a month. So you can stress test that data and say, was that company that we thought was risky, did it in fact have a breach? And the answer is yes.
Yeah, amazing.
So that was the approach we took was, hackers are like participants in a market.
Yeah.
And just like in a market, they're pricing that risk. And if you can capture that, that's the trick. If you can capture that market, then it reveals where the risk lies.
Amazing. And so how are you bringing it to market? I know you've had some partnerships announced.
Yeah. So
it can't be easy to do it by yourselves. You've got to join the insurance market.
Yeah, again, anytime you bring something new, I think. So ultimately, there's the story of how we brought it to market, and then there's the story of how it was accepted by the market.
Yeah, fair enough.
Yes. So how it was accepted by the market was, we felt like, again, because this isn't small and medium-sized enterprise, it's not even the mid-market, we had to bring something that large corporations didn't have, right? So that was the first thing. And so when we created the technology, I knew I had to have something that both the risk officer and the chief information security officer, the cybersecurity team, would go, ooh, I don't have that, I want that.
Makes sense.
And so by delivering that direct to the customer was ultimately the first step. And then by doing that, we could then start to help the customer answer some questions, which they weren't getting in the market, which was, frankly, what's our risk appetite?
Yeah.
Easy question to say, difficult question to really, answer. There's a lot of inputs. So I think once we were able to start to say, well, let's break that down, right? What would be the price of your risk transfer? How confident can you be in a certain level of retention? Do you have a captive? Do you not, right? So being able to answer those questions using technology, again, not my opinion, but there's a technology platform that's answering that question, ultimately then led to the customer going, okay, now I can answer that question. How much risk should I retain? What's our appetite for risk? Then the question became, maybe there's a type of insurance policy that would serve the function we want, ultimately, which is if we start to see that there's some sort of attack in the works, well, let's release some capital to fix it, right? So that's how it sort of evolved, in the sense that so very much it's technology platform first, and then there's certain products that can build from that, one of which is effectively an insurance product.
Yeah, it's super interesting. I think it's been very rare to talk to a cyber company that's not been all focused on how do we make our castle as strong as possible, and much more how do we understand what might attack us, and how safe we are from what's out there.
Yeah, I mean, our view is that there's a lot of fantastic, well-resourced companies that are, billion-dollar companies that are doing that. You know what I mean? So if AXA, Chubb, AIG, Beasley are doing this, what are we really going to add? Nothing. Yeah. Right? So we've got to provide a point of view that is different, and then we've got to provide a solution from both the technology and the risk transfer that's different and complementary. Otherwise, we're just shouting against this, yelling at the clouds, and nobody cares, right?
Completely. So, I find the message very refreshing. How is it landing more generally here at Monte Carlo as you share your story with the market?
So one of the topics that I've heard over and over again is this thing called the protection gap.
Yeah.
I've heard that in a lot of meetings, and I've also heard, as sort of a component of that, this issue of CrowdStrike, right? So CrowdStrike, just in case you haven't heard, it effectively was a large business interruption outage, but it wasn't a breach. In fact, it was just a software failure, if you will. And so that's only relevant in the sense that there was a lot of, oh my God, this is a new thing we have to worry about now, from a customer perspective, right?
Yeah.
And so this has kind of shown that coverage gap that everyone keeps talking about, it could actually be wider than people think. And so from what we're trying to do, we're trying to say, in the cyber insurance market, we're saying, look, cyber events are up. I'll show you the data. I mean, right? They're accelerating. Yeah. The cost is accelerating in the wrong direction. And yet, the prices on cyber insurance are flat.
Yeah.
And the insurance market is not growing. So again, this is not my opinion, these are just facts in the market that's saying, for whatever reason, the market should be perfect for more companies to buy cyber insurance. But the fact is they're not. And not only is that true, but when you look at the size of the coverage gap for cyber, it is, no joke, like 5 to 10 times greater than any other peril.
Yeah.
And then you look from another metric, which is how much are companies spending on protection versus insurance. Well, there's every $13 spent on cybersecurity controls, there's only $1 on insurance. So on every major metric you look at, and then I'll give you the last one, which is you've got, the biggest companies in the world are all, technology companies, right? And yet, the size of the cyber premiums relative to all P&C premiums is only 3%.
Yeah.
So if you can explain to me why the biggest companies in the world are Google, Netflix, Facebook, Microsoft, and yet the insurance industry is only selling premiums of 3% for technology, it tells you that coverage gap is massive.
Absolutely. Yeah.
So in that sense, we're trying to be just a small piece of a puzzle that's basically saying, right now, customers aren't buying this insurance. They're not. They don't believe it. They're not. They're just buying because they have to tick a box. So how are we, as an industry, going to provide a series of solutions? Because the answer isn't selling them more insurance.
Yeah.
Right. You got to sell them something that they actually want.
Yeah.
And that is really what we're trying to do, from sort of bringing something new to the table. And it's new. It's different, right?
Yeah.
So we're sort of saying it's here. It's possible. And here's what we can do with it.
It certainly would be a great shame if the industry was taken down by a cyber event, a bit like CrowdStrike, that it didn't see coming because we were.
I actually don't think that's quite. I think that's a very low likelihood. I think it's interesting you say that. I think that there's a bias, and I understand why, because of sort of nat cat events, right? And that really are devastating. But I think there's an overemphasis in cyber of the cyber cat event. I just think it's so unlikely, and it will not be as devastating as anyone thinks. And I just, again, that's a whole different conversation. But the point is, I wish the market would focus less about that cyber cat event and much more on these everyday attritional events that are actually causing losses.
Yeah, that makes complete sense. It's a good call to arms to hand out to the industry.
That's right.
Yeah.
And doing what I can.
If people are interested in finding out more, you'll be around for a few days here, obviously. But beyond that, people listening into the show, how do they find you?
Well, you can certainly go to our website, right, which is Intangic.com. And we are absolutely happy to get on the phone, explain how the technology works, walk through what it can do for you, how it can solve. Ultimately, for anyone who wants to find out more, it's really designed to answer that question: what is your risk appetite, right? Like, again, easy question to say, hard question to answer. And so anybody who's curious about that, they should give us a call, and I'm happy to talk to them.
Amazing. Well, thank you, Ryan. It's been a real pleasure having you on the boat.
Yeah, thank you very much.
Look forward to seeing you around the conference.
Okay. All right.
Brilliant.
Thank you.
Thanks for tuning in to the Reinsurance Podcast. If you enjoyed our show, don't forget to subscribe wherever you get your podcasts and leave us a review to let us know how we're doing, preferably 5 stars. For more insights and updates, follow us on LinkedIn and visit our website at supercede.com/podcasts. You'll find the links in the show notes.